Today's a perfect example of what the heck's going on. Plenty of green on this screen. We closed out the day up 374 on the Dow, 42,500. S&P up 60 handles. It was an aggressively positive day in the S&P 500, and that followed in by NASDAQ. S&P snapped a 3-day losing streak. Okay, at one point we were like less than a 1.5% away from record highs. We got down to about 3% away from record highs right now. 1.2 billion on the tape. We are now going to, so this week we're going into the end of the month, end of the quarter, end of the half, plus a massive Russell rebalance. So you're going to start seeing volumes be above the 1 billion level. And then up volume versus down volume is 2-to-1 up volume, basically. I thought what was extraordinary about Friday was that it was literally 1-for-1 for every, we had 3.5 billion shares on the tape, and it was 1-for-1 up volume versus down volume. Now, if you look at the graph, we had a positive surge earlier in the day, and you're coming in from a weekend of war. You're coming in for a weekend of a lot of anxiety and stuff around the U.S. attack on Iran, the Israeli, the whole confrontation within the Middle East altogether. I mean, a lot of uncertainty, a lot of confrontation, and yet the market was not responding to it at all. I mean, and there's no way, don't even say like it's priced in. No, that's just an erroneous, ridiculous comment. The bottom line is that the market is already deviating and keeping its primary focus on getting back into the market, I think, overall. At the end of the day, historically, markets don't engage geopolitical confrontations at all. They're usually fast and furious reaction, and then they move on and can put their focus elsewhere. If that's the case, then, it's also curious why the market's going up, because we still don't have the deals we're looking for when it comes to tariffs. China on the table, July 9th on the table. That was the postponed date of the 90-day pause, and that was the postponed date of the EU. Then we have UK, then we have India. Let's get a sense of where we're going forward. We're going up. It's what it feels like now. Look, there apparently are, I did an interview earlier today with the German TV who believes that we are heading towards a crash. And you know what? It's sort of funny. The only consistent component in every time that we've ever had a crash was that before it happened, we were trading at record highs. We're close to record highs, but I don't see any reason why we would be crashing here. Yes, there's a lot of uncertainty. Yes, the tariff situation is bad because there's no continuity, there's no solution, there's no resolution. And so if you were just, sometimes you just got to let the market do what it's going to do. The market's telling you what it thinks of all this information, and then go with it. Overanalyzing it is not doing anybody any good. You got to be in it to win it. If you want to learn how to trade the market, DM me the word wild and crazy. It's an extraordinary time to be alive. That's all I got to say about that. It really is. There's no reason to overanalyze this situation at all, and just realize that the market is breaking its downstream. We had about 2 or 3 weeks there after the crazy sell-off in that February through April, after the crazy rally back, then about 2 or 3 weeks of like complete indecisiveness around the tariffs, around the deals. We still don't know anything more than we did, but resolution will come to this market as it always does, and that's where we'll go from here. And that's all I got to say about that.